Let's get in a view on the rupee right now. Anindya Banerjee, Associate VP Currency Derivatives of Kotak Securities, is now joining us. Mr. Banerjee, thank you so much for taking out time for us. Could you just tell us your view on the rupee? Where do you think rupee is heading? Do you think that India would continue to be one of the best performing currencies?
Thank you for having me. Good afternoon to all the viewers. Yes, Indian rupee, what we are seeing is basically a structural re-rating of the rupee, and that really got the momentum in February 7th when the RBI met and surprised the market with a relatively hawkish monetary policy stance. This appreciation would continue in our opinion, and this appreciation is not just limited against the US dollar, it is happening across the board. And what happened was that when the RBI actually took on a more hawkish stance, it helped the real interest rates on the rupee, which means interest rates after adjusting for inflation. That is strongly positive, and that is one of the biggest drivers of an emerging market currency. And before February 7th, before that meeting happened, Indian rupee was one of the weakest currencies in the EM basket. And what happened after that was quite interesting. It became one of the best performing currencies in the EM basket. So it was RBI who has played a substantial role in to change the fortunes of the rupee.
Right. In terms of rupee at 65, how would you expect that FIs would look at it? Would they feel the left out feeling and probably would want to go ahead and invest more?
To some extent, yes. There is going to be some kind of a momentum buying of the rupee because rupee has low downside volatility and it has got a high real rate. These are the two parameters which makes an emerging market currency attractive as a carry trade. In a carry trade, you are basically trying to create a leverage portfolio of the currencies. You borrow in a currency with a lower interest rate and invest in a currency with a higher interest rate. So rupee perfectly fits the bill, and that is the reason why in the NDF market, rupee is trading at a premium compared to the onshore market. So if the onshore, let's say the dollar rupee is at 65, in the offshore market it could be around 64.90 or 64.95. So yes, the foreign investors are quite interested.
Right. And in terms of, interest rates, do you think that now interest rates are unlikely to go down, at least in the near term? But still this return is decently attractive for any FI investor considering the stability in rupee?
Yes, absolutely so. And especially if you look at the US 10-year yields have peaked and they have come off quite a bit, which is also helping the cause of the rupee because the interest rate differential is now becoming even more attractive. That's the reason why we have seen a rally in the Indian bonds. And also one more factor which could play into rupee strength, at least till this month end, is the exporter selling. Because it's our opinion that exporters have not really sold much since this breakdown happened after the state election results. And so these exporters might come in heavily over this week because this is the final week of the financial year, which could add to the strength of the rupee.
Right. In terms of rupee, what will be your near-term targets?
60, 70 is what we are eyeing. Could come over the short term.
Right. What did you say? 60.70?
No, 64.60. 64.60.
64.70. So it's towards almost towards your target.
Yes, it's almost like 1% away. So we could see it. We won't be surprised if the central bank will continue to intervene in this market. But we believe, in spite of the central bank intervention, we could see the rupee continue to strengthen.
Right. In terms of rupee, how much of a lag would it have before it starts to impact the exports again? With the strength that it is seeing versus other emerging markets, you think 3 months down the line, 6 months down the line, when will it start to have that impact on exports?
But there is not a real one-to-one correlation between a strong rupee and the exports because our export, we do a lot of re-exports as well, which means as a let's say, petroleum company could be importing petroleum, which is again going to benefit as the rupee strengthens, and then exports it. So there is not a strong correlation between a strong rupee. But yes, if the rupee continues to outperform against the whole basket of currencies, what we will see is that the current account deficit will increase gradually, and it has already started to happen since 2013 December. We have seen the current account deficit gradually increase, though it's not at any alarming levels. But since then, it has been increasing because Indian rupee has started to outperform against almost all emerging market currencies. So yes, there is a positive correlation between the currency strength and the current account deficit, but not really straight away into the exports.